Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como with Ireland Como Lafoy, and today is July the 7th, 2025. All right. For those of you who are new here, this YouTube channel is free and focuses on Canadian agriculture. If you wouldn't mind clicking that subscribe button if you want to get more of this information, and if you like this video, hit the like button and show us a little love. Feel free to put some comments below as well or ask some questions. We're open to that as well. All right, let's get into what happened in the markets this week. Today, we saw some red on the board today as we started off the week. Canola was down $22.90 at 696.80. That was kind of underperforming most of the market today. We'll get into that in our futures section of this video. Minneapolis wheat down 9.75 cents today at 657. Kansas down 8.5 to 527.5. That's Kansas wheat. Chicago wheat down 8.25 at 548.5. Soybeans down 28.5 cents today at 1020.75. That's testing a little bit of support or getting towards the bottom of the channel. We'll also get into that. Soybean oil down 0.8 of a cent today at 53.86. Corn down 13.5 cents at 418. Canadian dollar down 42 points today, down to 73.09. The cattle market was the shining star today, up a buck 85, a hundredweight on the live cattle to 215.90. Feeder cattle added 422, hundredweight to 313 and three quarters. All right, we're going to start with weather today. We're going to look at the Canadian and the U.S. continental weather today. Here's Western Canada accumulation of precipitation over the last 7 days. This ended yesterday, so it doesn't include any rains that happened today. And I know there were some rains that fell today. As you can see here, and let's see if I got my trusty laser pointer up here. As you can see, the eastern part of Alberta is still on the dry side as far as the last 7 days go, as well as the western part of Saskatchewan. This area of Saskatchewan did receive some rains. Central North Saskatchewan did receive some rains over the last week that may be able to sustain it a little bit longer into a bit of a drier week. There is some heat coming this week as well. I think Wednesday is the hottest day that we're going to see this week. Lots of rain in the very southern part of Manitoba over the weekend, and I can attest I witnessed some of that as my daughter's softball game got delayed as a result. As we move and look at the continental U.S. here, I'm kind of particularly focusing on the Corn Belt. There was quite a bit of precipitation. It was relatively spotty, however, so it's not that it was super widespread rain event, but lots of little rain events that added up over the last 7 days. I think this is being reflected in futures markets as well, with some of the pressure as this, along with the forecast, which we'll get into in a second, is kind of alleviating a lot of the risk concerns. So, when there isn't very many risks on the weather front during weather season, it tends to have a negative effect on futures markets, and that's kind of what we're seeing is some very beneficial rains in the Corn Belt, maybe a little less here in the Delta where the soybeans are grown, south of the Midwest, but overall, I think this is a positive for the row crops in the U.S. The forecast also looks positive for the row crops in the U.S. This is the European ensemble model, and as you can see, it puts quite a bit of at least half an inch in most areas of rain into the forecast. If you look at the GFS, maybe it looks a little bit more spotty, or maybe this is just a little bit more refined of a model. Not sure which one, I'm not going to argue which one is better or worse, but this one, has heavier rains, maybe in some of the southern parts of the Corn Belt in Nebraska and Iowa. But, overall, the Corn Belt is looking to get some good rains. And as you can see here, these lighter blue areas are actually into the inch and a quarter, inch and a half area. So some really good rains forecast for the Corn Belt over the next little while, and they've received some in the last week that has also been very beneficial. All right, kind of going back to Western Canada here. This is the GFS model. This is the one we show you quite frequently. It does put some rain, again into the mountainous areas of Alberta, but leaves the eastern part relatively short. Most of Saskatchewan is short, and it looks like a lot of Manitoba is going to get some rain in the next 5 days as well. Um, one other model I wanted to look at recently was the Canadian Global Environmental Multiscale Model, or the GEM. This kind of breaks it down for us, by province. As you can see, the GEM model has a little bit more rain coming into, the southern Alberta, but again, quite dry here in the central eastern part of Alberta. Also, that kind of moves into the, central or northern western area of Saskatchewan. There is some lighter rains forecast. I mean, we're talking 5 to 10 millimeters at the most, even 5 to 7 millimeters at the most, coming back through, some of this Yellowhead Highway corridor. But, this southwestern part is looking like to get a little bit more, but it's a little bit more spotty as well. As we move into Manitoba, this one shows a little bit, more concentrated in the southeast area. Again, this isn't a huge cropping area, lots of cattle and just stones and things that are grown there. But Westman may experience some some storm events as well. But overall, overall, the Canadian prairies, I say, is biasing still a little bit dry, and there is some heat that is forecast into the week today as well. With Wednesday, I think, looking like the hottest day, getting into the 30 plus degrees Celsius ranges. All right, let's move into some statistics now from the Canadian Grain Commission. I don't share these every week, but I just thought that this week was somewhat interesting as we're kind of moving away, or kind of getting a better picture of what the end of the year might look like. This is Canadian cumulative wheat exports. As you can see, we're actually doing a pretty good job here of exporting. We're significantly higher than last year, and now we've kind of moved above average. So the back half of this year has actually been relatively good for Canadian wheat exports. I think we are seeing that reflected in basis values. Basis values continue to be strong, and buyers continue to kind of stretch for GPOs in this market, or target prices. So again, it's a good healthy wheat market out there, and the futures are just kind of getting pulled lower by some of the others, and we're going to talk a little bit about the spreads in the future section of this video. So stay tuned for that. Also, I just kind of wanted to highlight, dry pea exports. We don't talk necessarily about dry peas a lot on this channel, but I know this is important to a lot of Western Canadian farmers. Here's the weekly exports. As you can see, it is petering out as we move through the summer. This is kind of a normal thing, as you can see here. But what's maybe a little bit more concerning is just that we aren't necessarily keeping up with averages as far as our exports into the end of the year go. So we're going to kind of move to a lower than average amount of exports this year, and we're definitely behind last year. The Chinese tariffs definitely hurt us this year, although we didn't see India place those same tariffs on, or they extended their tariffs. So we have been exporting to India. It's just been a bit hard to get into the Chinese market, obviously. So that's the story on dry peas and the statistics there. Canola, we still see some very good, strong canola producer deliveries into the commercial system. Now, this cumulative deliveries combines both the export facilities and the crush facilities, or the process facilities. It is the process facilities that are driving the overperformance, at least at this time. I mean, that's not to say that exports are a laggard at any point, but we have seen kind of that, the seeding lull kind of pick back up again, and we are trending higher into the end of the year. We did see Statistics Canada raise the stocks as of March 31st and some production numbers to kind of show that there was still, canola in farm bins that was able to be delivered, because as we got to this stage with the old numbers, we never would have been able to sustain this if their numbers were true. So we knew they were false, or at least we knew that they were understated, and they did adjust. And now we continue to see strongish deliveries, or at least we're above average here as far as the last 4 or 5 weeks go of producer deliveries into process facilities, which means that the cumulative crush will likely continue to move higher as well. Here's just a quick chart of the Canadian cumulative exports as well for canola. So again, really good performance here on the export side. We're well ahead of averages. We're well ahead of the previous year. So really good year for canola exports and for crush. All right, let's get into US crop conditions now. Here's the one that concerns me probably the most is that corn crop conditions rose now to 74% good to excellent, I believe that is. And, continues to move higher than the outside bounds of the last few years, signaling that this crop is still in good shape, which is good from a yield perspective. We continue to hear higher than normal yield expectations, 185 plus, et cetera. So, it's not out of the question. And US crop conditions are really good. I think farmers are looking at that as a positive. And even with, futures values the way they are, there could be some good cash returns on those corns if you get the big yields as well. But it does create some concern moving forward for the viability of current corn conditions above the $4 area. So we may see corn trade with a three in front of it if these crop conditions continue to rise. And I think that's the risk coming out of one of the risks coming out of this crop conditions report as well. Here is soybeans. Oops, jumped ahead of myself there. Here's the soybean. It remained static as well at 66% good to excellent. The one thing I will say, I guess, is that, there was 1 percentage point that moved from good to excellent, and then one that moved from fair to good. So I guess overall, if the conditions grew a little bit, but just when you add good to excellent together cumulatively, it looks like unchanged. So overall, I would say the U.S. Soybean crop conditions are up or are better than they were the week before, but just marginally, if that makes any sense. Um, Wheat was a bit of a ringer today. We saw wheat go from 54% good to excellent to 50% good to excellent. So we chopped 4 percentage points off of the U.S. spring wheat crop conditions. That could assist the Minneapolis wheat futures market as we move into tomorrow. Depending on what happens with the winter wheat side, we did see quite a bit of weakness there. The winter wheat, I didn't put up a chart, but the winter wheat condition ratings were essentially unchanged. So, you know, a significant amount of it's been harvested already. So we're kind of getting into that stage. In fact, this week might be the last one that they report the winter wheat crop condition ratings. But the spring wheat, is still very alive and well. And when you look at U.S. spring wheat crop conditions and one of the smallest crops that we've seen in recent history, this could be a very small spring wheat crop for the U.S. if this crop condition rating is going to affect yield. So some of the dryness that was present in Western Canada is also affecting those areas of the U.S. that grow the spring wheat. Okay, moving into futures markets now. Today again was a red day across most of the markets here. We saw canola peel back significantly. It had gapped at one point this morning, but did close relatively, strongly lower, 23, about 23 bucks a ton lower. It did come down and test this 50-day moving average here. And then the trend line is still here in place here. So those I would look at to be some support. If we kind of start to break down below that support, then we might move to test these previous lows here at about 665. So, this market does look concerning. I am concerned here that this market tried to rally, made a lower high, and then started to fade. So not to say that this rally is over. It hasn't broken per se the longer term trends here, but it did break some shorter term trends when it moved down to test the 50 before, and now it's getting close to testing our adjusted trend lines as well. So it's not out of the question that we are going to see a move here, back down into the 660, 665 area. So just be aware of that if you haven't hedged your canola yet. One of the things I think that is a factor here is the size of the speculative long position. Now, as of Tuesday of last week, the spec long was 139,000 contracts long. So this is a record long position for canola. Canola is not a big spec market, but it still is, still has some speculators in it. And so there could have been some profit taking, there could have been some risk aversion. This is a long liquidation potentially, and we did see canola kind of underperform the rest of the market. So, we saw almost 3% losses in canola, which was larger as a percentage than a lot of the other commodities. So, a lot of the news outlets will be saying that canola was pressured by the soybean complex and things like that, but really, this market today did underperform. It had steeper losses as a percentage than soybeans, significantly steeper losses than soybean oil, and we saw crude oil values even gain in value today. And so I think that there's just some long liquidating happening in the canola market, which isn't necessarily surprising when you look at some of these canola historical patterns. This is a seasonal chart with three different time frames on it from Moore Research Center. Now, longer term, this pink is the 30-year, black is the 15-year. The 5-year looks a little bit erratic here compared to the others, but there was a drought year in there, which does skew, the 5-year to some degree. So just to keep that in mind. But generally speaking, we do see, a rally into spring. It does kind of fade off into, late June or early July, and then rallies back a little bit. We are seeing that exact pattern play out here, and then it kind of dumps off as we move through the month of July, and continues to kind of see weakness until we get to even the end of August, beginning of September. So I'll just kind of go back here to the futures. Again, rally in the spring to highs, pulls back, rallies again before the beginning of July or at the beginning of July, and then starts to fade. So, that's exactly what we kind of see happening here, according to these seasonal patterns. Oh, here would be the rally back here. So just be aware of that, because we could be seeing some weakness ahead of the harvest period in this marketplace. Minneapolis wheat, again, the wheat markets all saw losses today. Minneapolis saw 9.75 cents of losses, which was a little bit larger, as a nominal value than the other wheat markets, but as a percentage, it was smaller. Um, again, it did test the 20-day, it did stay above the 20-day. It kind of held most of the gains that we saw, into the July 4th holiday. Overall, this is a better wheat market than some of the others. Here is the Kansas wheat market, and as you can see, losses maybe don't look as steep, but we also are, trading near the longer or the medium term lows, right? We're getting back. We made a new low today, or a new low since May the 12th. So we could be seeing continued weakness in the winter wheat market. And the spring wheat market is just kind of following the winter wheat market, but isn't fading quite as quickly. Here's another way to look at that. This is the spread between Minneapolis and Kansas against the August contract. And as you can see, this has now peaked or moved above $1 a bushel spread. And that actually has widened quite considerably in the last couple of days. So I think the crop condition, some of the crop condition ratings may be priced into here. I don't know if a 4-point move was priced into here, but so we could continue to see this spread widen tomorrow as a result of the crop condition ratings today. But I mean, we have seen this spread move out to, $2 in some really crazy years. But we are kind of getting into that area here where, there obviously is a market signal that there's more value for, for the hard wheat than there, for the hard spring wheat than there is for the hard winter wheat, which is kind of putting a premium on protein, right? So if you're looking for, what the protein premium market looks like today for your Canadian spring wheat, we're already seeing kind of $1 a bushel US above winter wheat values at this time for the better protein wheat. Looking at soybeans now, most of the gains, or almost all the gains that we saw coming into the July 4th weekend, have been erased. We're kind of moving back to test this channel now. Now this channel looks pretty strong, right? Around 10.11 or 10.12. It's kind of tested that area, 3 times now. It was kind of established here back at the beginning of May, moved to, close to testing it in, late May, and then did it so again in late June. So now we're kind of moving back to test that. As you can see, the moving averages have all converged here, kind of also signaling a neutralish market. But overall, as a result of these tests, if we start to break down below this 1010 area or into the $10 area, that would be a big negative sign for soybeans. So there should be support at this 1010 area or at the bottom of this channel. But if we do see it kind of fail at that support, that would be a bit of a canary in the coal mine or a bit of a warning sign. Corn as well is testing the previous lows here as well. There's no channel here other than a downward channel. Again, corn conditions are outside the bounds of the last 5 years as far as condition ratings go, and that is being reflected here as well. We saw, big losses in the corn market. Again, I think, the market was pricing in some optimism on trade. Trump was going to speak on the 3rd of July. He did speak on the 3rd of July. I think some were anticipating that he would announce a trade deal, particularly with China and maybe even India. That didn't materialize. So I think the corn market kind of sold off. I think the major commodity markets sold off as a result of that, today, and dragged everything, lower. I'm going to end on the bright spot today. This is August live cattle. As you can see, it's now kind of trading back above the 20-day moving average. It did kind of trade a little bit below that recently, kind of found some support here at the 50-day moving average, but now is pushing higher. So fats are, kind of back now into what looks like a bullish pattern or a continuation pattern, just with maybe a little bit less gusto as we did make a good correction here. What is interesting is that feeder cattle made a new high today in this market. This August feeder cattle. Now, this is still the most liquid and most open interest contract on the board, so I'm still using it. But I recognize that the September may come into play here pretty quick. But so far, I'm still, this is still a good contract. This still looks like a bullish formation, and I would say that this is another good reason to look at the live market and say that it could possibly continue to move higher as well. All right, that is all that we have for you today. Remember to subscribe to this YouTube channel by clicking the subscribe button wherever you see that thing. And if you want more of our premium analysis and content, make sure you go to canadianagmarkets.com/subscribe, and we'll get you hooked up with um, all of our premium content. So thanks again. Have a great day. We will see you again tomorrow.